First of all, let me begin with the background of the borrower, Gigi Coffee, Sendirian Berhad. Gigi Coffee was incorporated on 11 August 2014 and started operations in 2019 as a Malaysian homegrown coffee retailer, offering affordable, high-quality coffee for urban consumers. The company opened its first outlet at Pavilion Kuala Lumpur and expanded rapidly to more than 160 outlets across Malaysia by early 2025, demonstrating strong management capability and steady growth in a competitive F&B industry. During the COVID-19 pandemic, Gigi Coffee shows strong resilience by adopting a grab and go concept, digitalizing its sales through online platforms such as Grab, Foodpanda, and their own app, and managing costs effectively, highlighting a well-managed and adaptable business. The company is led by the founder and Group CEO, Marcus Low, supported by actively involved directors who are also major shareholders. This ensures strong ownerships, commitment, accountability, and alignment of interests. Overall, with experienced management, clear expansion strategy, and proven resilience, Gigi Coffee demonstrates a strong corporate character under the 5Cs and Camparis models and presents a relatively lower credit risk profile.
The purpose financing is intended to support the construction of 8 GG University Cafe outlet at selected Uitm campuses across Malaysia. The fund will be utilized for renovation work, purchase of cafe equipment and furniture, working capital requirement, as well as the installation of solar energy panels. These initiatives support business expansion, operational efficiency, and sustainability goals. The financing structure includes term loan for long-term capital expenditure, hire purchase for equipment and furniture, and an overdraft facility to support daily cash flow needs. The total financing amount sought is 3.2 million ringgit, which is appropriately structured and commensurate with the scale of the expansion project.
For this section, I will explain the project details and risk assessment for Gigi Coffee Sendirian Berhad. The proposed financing is used to support Gigi Coffee's expansion by opening more outlets. The fund will be used for renovation, purchasing coffee machine and equipment, setting up post systems, buying initial stock, and covering salaries and operational expenses during the opening period. This expansion is directly related to Gigi Coffee's existing F&B business, so it is not something new or unusual. The asset finance are used to generate sales, which will create cash flow to repay the loan. In terms of management capacity, Gigi Coffee already has several outlets and experienced management. The business generate daily cash flow from multiple locations, which support stable loan repayment. There are several risks involved. Operational risk may occur when opening many outlets, but this can be managed through proper procedure and staff training. Market competition risk exists due to intense competition in the F&B industry, while financial risk may arise from high initial costs. Lastly, economic risk may affect consumer spending. However, these risks are manageable. Overall, the project risk is moderate and acceptable.
In terms of ownership and top management, Gigi Coffee is led by an experienced and stable management team that has been in place since 2019, headed by its Chief Executive Officer, which is Marcus Low. This strong leadership is evident in the company's rapid expansion from a single outlet to over 150 outlets nationwide. The company is supported by BD Sendirian Berhad with a paid-up capital of 1,500,000, together with a strategy of reinvesting profit to strengthen its financial position. Furthermore, a clean credit record and the implementation of standardized operating procedures reflect disciplined management and the company's ability to sustain long-term growth.
Next, I will briefly explain the business and operations of Gigi Coffee Sendirian Berhad. Gigi Coffee operates in the food and beverage industry, offering coffee, beverage, food items, and also merchandise through a grab-and-go concept, targeting student, young, professional, and urban consumers who prefer affordable, good quality, and love coffee. Sales are generated from walk-in customers and also online orders via digital platform. The company operates with a simple and scalable model supported by standardized procedure to ensure consistent quality, smooth service, and effective cost control. Supported by a strong cafe culture in Malaysia, Gigi Coffee has a positive brand reputation and continues to expand its outlets and products offerings. While facing competition and cost pressure, those risks are mitigated by its strong brand presence and stable cash-based sales model.
First, from the economic perspective, Malaysia's economy is currently stable and growing. The country's GDP is expected to grow by around 4.5 to 4.8%, supported by strong domestic consumption and growth in the services sector. Inflation remains low and interest rates are stable, which creates a supportive environment for business. In addition, government initiatives such as Budget 2026, Salary Adjustment, and Visit Malaysia Year 2026 are expected to increase consumer spending, especially in food and beverage sector. This provides a positive outlook for Gigi's Coffee expansion plans. In terms of industry conditions, Gigi Coffee operates in Malaysia's fast-growing coffee and cafe industry, which is valued at approximately RM 4.4 billion. The industry is driven mainly by young consumers, cafe culture, and the grab-and-go lifestyle. Gigi Coffee is one of the leading coffee chains in Malaysia and continues to remain competitive by offering affordable, good-quality Arabica coffee and using digital platforms. Although competition is intense from the brand like Tea Life and Zeus Coffee, the overall industry is expected to continue growing in the country. Finally, regarding market risk, Gigi Coffee faces several challenges such as dependence on imported coffee beans, increasing sustainability, compliance costs, and strong competition. However, these risks are managed through competitive pricing, strong brand recognition, and innovative strategies like university cafes concept and sustainability initiative. In conclusion, the economic environment is supportive, the industry outlook is positive, and although market risks exist, they are manageable. Overall, this creates a favorable condition for Gigi Coffee's growth and financing plan.
Next, I will explain the financial ratio analysis.
This slide shows the company's ability to repay debt. Overall, the repayment capacity is improving due to strong cash flow. Revenue increased sharply from 7.69 million ringgit in 2022 to 53.92 million ringgit in 2024. In 2024, the company earned 4.2 million ringgit profit with a 7.45% profit margin. The company has made operating profit for 3 consecutive years, although liquidity is weak, with current ratio of 0.62. This is supported by fast sales and steady cash flow. Overall, the repayment capacity is satisfactory, but liquidity needs monitoring. Next, this slide explains the company's capital position. The capital structure is improving after returning to profit. Paid-up capital is low at 1 million ringgit, but retained earning is increased to 3.57 million ringgit. However, leverage is still high with a debt-to-equity ratio of 501%. The equity ratio has turned positive at 0.17 and total asset increased to 30 ringgit 45 million. Overall, the capital position is moderate, but debt reduction is needed.
Next is collateral and guarantee. Collateral is the asset pledged to the bank as security for the loan, allowing the bank to recover funds if default occurs, while the guarantee provides additional repayment protection. For this facility, Gigi Coffee Sdn Bhd offers a free food shop lot at Icon City, Bukit Mertajam, Penang. The property is valued at RM 4 million, giving the bank about 125% loan to value coverage for the RM 3.2 million facility. The title is clean with no existing charges, and there are no CCM or CTOS issues, so legal charges can be registered smoothly. Market demand in Penang remains strong and low depreciation risk. Although there is some vacancy risk from the F&B sector, this is mitigated by the prime location and freehold status. Therefore, with a 25% safety margin and quarterly monitoring covenants, the collateral provides strong protection.
I will explain the guarantees provided for the loan facility to Gigi Coffee. In addition to the collateral, personal and group guarantees will be provided as security. The personal guarantors are the directors of the company who are actively involved in managing the business. This shows their strong commitment to ensuring that the loan is repaid. Besides that, there is also a corporate guarantee from BT Brands and Bhd, which is a corporate shareholder with a share value of 1.5 million ringgit. The presence of a corporate guarantor strengthens the bank's position, especially in the event of any repayment default. All guarantees will be supported by valid and enforceable documentation. Overall, the combination of director guarantors and a corporate guarantee provides sufficient and acceptable security to the bank, even during an uncertain economic situation.
On this slide, I will explain the credit risk analysis and mitigation strategies for the loan using the 5Cs credit model, which is character, capacity, capital, condition, and collateral. Overall, the credit risk is assessed as manageable, supported by structured mitigation measures. Number 1, character. It have a low risk. Starting with character, the risk is considered low. The business is managed by experienced F&B directors with a proven track record. The company has been profitable since 2022 and there are no adverse management issues reported. This indicates strong management integrity and reliability. Number 2, capacity. It has a moderate risk. Capacity, which is assessed as moderate risk, the business has shown strong revenue growth from 2020 to 2024. However, there is negative working capital and ongoing expansion has placed pressure on cash flow. This means repayment ability exists, but it must be closely monitored. Number 3, capital. It have a moderate risk. For capital, the risk level is also moderate. Shareholders' fund have improved in 2024, which strengthens their financial position. However, leverage remains moderate due to business expansion. Overall, the capital structure is acceptable but require discipline. Next, conditions. It have a moderate risk. Under conditions, the risk is moderate, which is the F&B industry is highly competitive and the business faces cost inflation and rental risk. However, demand remains stable, especially from university campuses, which provide recurring customer traffic. Lastly, for collateral, the risk is assessed as moderate to high. The property used as collateral is valued at RM 4 million ringgit, while the loan amount is RM 3.2 million. This result is tight collateral coverage, meaning security is adequate but not excessive. For mitigation measure, to mitigate this risk, several measures are implemented. Repayment is structured to align with cash flow. The bank will monitor DSCR and audited account regularly. Retained earning and dividend restriction will preserve liquidity. Both personal and corporate guarantee are provided. In addition, insurance coverage is taken on the charged property. Next, for this slide presents the Campari credit risk analysis, which provide a holistic view of borrower's risk profile. For character, the risks remain low. The management is experienced, committed, and has a profitable expansion track record. No mitigation is required at this stage. Second, ability is assessed moderate risk. Loan repayment depends on the performance of Uitm cafe expansions and outlet operation. To mitigate this, the bank will conduct monthly repayment, monitoring, and early intervention if performance weakens. Next, for margin of financing is considered low risk. The financing margin is reasonable and within market norms. Mitigation involves maintaining the current margin policy. Next, for insurance, the risk is low. All key business assets are insured, and the policy are assigned to the bank, ensuring protection against unexpected losses. The purpose of the loan carries is low risk. Funds are used for productive and sustainable businesses activities. The bank will conduct and use monitoring to ensure proper utilization. The amount is assessed as moderate risk. The loan size is proportionate to the business scale and revenue. Risk is mitigated through progressive drawdown, ensuring funds are released only when needed. Lastly, for repayment is considered moderate risk. Repayment depends on stable cash flow and outlet performance. To mitigate this, the loan tenor is matched to asset life and overdraft facility support liquidity.
For credit decision, the loan application by GG Coffee Sdn Bhd is approved as the borrower demonstrates a low overall credit risk. This decision is supported by a strong assessment under the 5C of credit and the Campari framework, as well as sufficient collateral and repayment capacity. So next, based on the 5C of credit analysis, GG Coffee Sdn Bhd demonstrates a strong overall credit profile. In terms of character, the management team has relevant experience and a good leadership track record. This is further supported by a satisfactory status report and a clean repayment history. So the next one is for capacity. The company has recorded strong revenue growth and expanded to more than 150 outlets across Malaysia. This reflects the company's ability to generate sufficient cash flow to meet its loan repayment obligation. Next, regarding capital, the company has a paid-up capital of 1,500,000 ringgit along with reinvested profits. This indicates strong commitment from the shareholders and provides financial support for the proposed financing. So the next one is in terms of condition. The proposed financing is aligned with the company's core business activities and is supported by the positive outlook of the food and beverage industry in Malaysia. The last one is for collateral. The loan is secured by a property with an estimated market value of approximately 4.1 million ringgit, which help to mitigate overall credit risk. So next is the analysis based on the Campari framework. Under the character, the borrower has stable ownership and experienced management, which enhance the credibility of the company. For ability, the consistent increase in income indicates that the borrower is in a strong position to meet its loan repayment obligation. In terms of margin, the proposed pricing of BLR plus 0.5% per annum is reasonable and appropriate given the profitability of the business and the level of collateral protection. Regarding purpose, the financing objective is clear and aligned with business expansion and long-term sustainability. For amount, the total financing of 3,200,000 ringgit is appropriate relative to the size of the project and the scale of the business. In terms of repayment, the loan repayment are supported by operating cash flow generated from business expansion and ongoing operations. And the last one is under insurance. The collateral and other business assets will be to lie issued in accordance with standard.
This slide explains the credit security arrangement supporting the loan. For type of collateral, the collateral consists of one shop lot located at Akon City, Bukit Mertajam, Penang, and it is owned by the borrower. For collateral value, the market value of the property is 4,100,000. For collateral/loan coverage, the total loan amount is RM 3,200,000, resulting in adequate collateral coverage for the bank. For credit facility secure, the collateral secures multiple facilities, including a term loan, hire purchase, and also overdraft. For legal charge arrangement, the bank will hold a legal charge over the shop lot. Legal right remain with the bank until full settlement of the facilities, ensuring strong security. This slide also explains the credit security arrangement for the loan. First, the guarantors. There are 4 guarantors for this loan. They are Low Bob Tech, Low Kai Lun, Low Siu Shun, who are all directors, and BT Brands SDN BHD as the corporate shareholder. This guarantee provides assurance to the bank in case the borrower fails to repay the loan. Next, the conditions precedent. There are conditions that must be fulfilled before the loan is disbursed. The borrower must sign the letter of offer and all loan security document. A legal charge over the property must be completed. All guarantees must be fully signed. There must be no adverse record in CTOS and CCM, and all legal and documentation fees must be paid. Lastly, the condition for drawdown even after approval. The loan can be drawn if all conditions are fully satisfied. The legal charge must be perfected, the loan arrangement must be enforced, the borrower must not be in default, and the loan proceed must be strictly for the approved purpose. In conclusion, this credit security arrangement help protect the bank and ensure the loan is properly controlled.